The following information relates to the housing market and the housing outlook both nationally and for local information for Metro Denver. The statistics are provided courtesy Dr. Lawrence Yun of the National Association of Realtors and of Metrolist. So, where are we? Are the current existing home sales ready to break out? Well, we don't think so. As a matter of fact, it seems like there's a flattening of the market. But the good news is there's not the sharp decline that we saw from 2005, 2006, and 2007. Here's the monthly existing home sales, and you can see some rise in those home sales early in 2011. The peak you see back in 2009 and 2010 deals with the first-time homebuyer tax credit, which spurred the market, but then caused the market to drop off rapidly when that tax credit was completed. There are some improving factors for higher home sales. What we have is a little bit better job creation, a little bit better stock market recovery. The real estate net worth seems to be stabilizing, and there seems to be rising rents. We'll talk about all of that throughout our slides. Most states and most areas of housing follow U.S. payroll patterns. And so what we see is that as the jobs have declined, so as housing sales decline, and we're seeing some uptick in the housing sales relating to some uptick in the job increase. However, that is increasingly modest, and so we do not see the housing sales going up drastically unless the jobs go up drastically. Here's the unemployment claims for the past several years, and as you can see, it's very important that the baseline, or 400,000 people, do not claim unemployment. And what we see is that that was certainly happening until this year, when that seems to get a little bit flatter. We need that to be under that 400,000 mark for us to have a better economy. Residential real estate's net worth is a long way to recovering, but it's not falling. And what we were seeing from 2006 until 2010 was a steep decline in the net worth of real estate in the United States. That seems to be flattening. Again, new home prices seem to be increasing, and existing home prices seem to be decreasing. What that's indicative of is that existing sales average in foreclosures, distressed property, and short sales. An important thing to note is that home prices versus rental have shifted positions. For many years, home prices and rental prices moved about equally up the scale, and then for a while, prices of homes started to increase. That dealt with the booms in 2005, 2006, 2007, and now you see the decrease in that. But the prices of rentals still goes up. Good news, from 2005 until 2010, the median price of homes has dropped, again because of distressed properties. The mortgage rates have also dropped, and what that means is that there's greater affordability for many people to be able to buy homes. What we had previously was about 7 to 8 million renters who were qualified to buy homes, and now we have 15 million renters also qualified to buy homes. What that should mean is that within a year or two, we're going to see that pent-up demand of renters starting to buy again. You note the amount of rental increases. This is due to the large amount of people who have either been foreclosed or had bankruptcies and who have to rent homes. And again, in the next few years, as their credit clears, they'll start getting back into the marketplace to buy homes. And that's going to create more and more demand on existing home sales. Also good news is that the number of serious delinquent mortgages has been brought down a little bit. from the peak that it was in 2009. And so we're seeing a decrease of that slightly. And I'll show you some numbers for Metro Denver as we get towards the end of this presentation that indicate that Denver is doing even better than nationally. So where's the smart money buying right now? Well, the smart money is in investors who can't get mortgages but have cash, and they're buying homes because they don't want to be bothered by mortgages, they don't want to be bothered by appraisals, and they want to hedge against future inflation. And right now they see the housing markets in many parts of the country as bargains. Here's the information about U.S. housing starts. That number is down significantly in new home sales in Denver, as well as Colorado, as well as nationally, are down significantly. Now that's bad news in many ways because new home sales bring a lot of energy and a lot of employment, but it's good news in one way. If you understand supply and demand, we are having lower supply, and that should, coupled with the higher demand in the next couple of years, mean that housing prices will go back up and there'll be more demand for the resale market. So here's some upside potential. The FICO scores required to purchase a house normally were somewhere around 720s, and those numbers, because of a tightening of the credit markets, went up to 762 in 2010. If that gets looser over the next few years, what we're going to see is about 15 to 20% higher sales possible by loosening that credit market. Traditionally, that market has tightened over time and has loosened over time. Here's some other good news. Most of those homes that are distressed were purchased in 2005, 2006, 2007, and 2008. Those homes were upside down from the beginning of the home loan process. And what we see now are those homes that were purchased in 2009 were purchased at better pricing. And so those people who have purchased in 2009, almost none of them are in the distressed property situation. Here's some downside potential surprises. The unemployment numbers. They continue to be sluggish at best. A lot of people are looking but can't find jobs, and a lot of people are underemployed. This presents a circle of bad things happening. Number one, when people are unemployed, they just can't afford to buy homes. But number two, there's this circle effect, which means that without the construction of new homes, a lot of jobs are lost. And when jobs are lost, again, those people can't buy homes. So here's some baseline outlooks. The gross domestic product expansion over the next couple of years should look to be about 2.5% to 3%, sluggish but growing. We should see about 1.5 to 2 million jobs added yearly. Again, sluggish but growing. And mortgage rates, unfortunately, look like they're going to go up by the end of 2011 and maybe even more in 2012. We see no meaningful change in the national prices of homes, but I think there is some change in Metro Denver. So here's some local information for you. The median price of homes and one-year price growth. You will notice that when you see the center line, that from 2007 until 2009, the median price of homes had dropped. And then you see that in 2009 through 2010, the median price of homes has gained. You see a spike in that gain. That's due to that first-time home buyer credit, and you see a drop immediately when that tax credit was gone. But you still see an uptick in pricing. Currently, this month, Metrolist indicates that the average price of homes in Metro Denver has raised by 3.5%, and that's good news. Again, it's neighborhood by neighborhood, area by area. The state foreclosure rate is significantly better than the U.S. averages. That again is good news because at one point in 2005-2006, Colorado and Metro Denver were actually leading national averages. Here's a graph that shows you from 1975 through today what the pricing of homes has done. And what you notice is that in 2008, 2009, 2010, and through today, that the homes are significantly less in price than they were in the 2005, 2006, 2007 heyday. You also might notice that the same phenomenon of flattening of prices happened in the mid-80s. And the people who purchased homes at that time frame didn't lose value and were poised to gain that big market share that ended up happening in the 90s and early 2000s. Perhaps this is a great time for people to buy given the low interest rates and an upside potential that's likely to happen in the next couple of years. I also want you to know that the pricing that you notice in Metro Denver is very specific to areas. So if you take a look at South Suburban Central, for instance, the first set of graphs, you notice that some house prices went up and then housing dropped off a little bit and then flattened out. And in South Suburban East, we notice that same pattern. In South Suburban East, it's quite likely that that pattern was due not to actual average prices, but that the high-end properties could no longer get financing and were struggling to be able to be sold, and when those were taken out of the average, that the prices dropped. The good news is, for Douglas Highlands Ranch Lone Tree area, the prices have been quite stable over the past several years. Very small decline, very small rise, but stable. And that's good news to convey to your buyers and to your sellers. Here's a couple of quotes to end this presentation. Franklin Delano Roosevelt said, "A nation of homeowners is unconquerable." And Ronald Reagan said, "We will preserve the part of the American dream which the mortgage interest deduction symbolizes." Please tell your congressmen and your senators we need that mortgage interest deduction to keep our market healthy and stable. Thank you, and you all have an incredible summer.